morning, traders. Good morning. Okay, today is the 7th of July. Yeah, today is the 7th of July. So I'm just going to do a few breakdowns of certain currencies, and I usually like to start with my DXY. Okay, so this is a monthly time frame, and on DXY we can see clearly that the market is going up because the market is making high highs, high lows, high highs, higher low. This is likely our higher low, which we'd expect price to push further up. So with that being said, let's go into this chart. Okay, so first of all, we know that the market moves from a PD rate to a PD rate. So here the market took liquidity. Okay, the market took sell side liquidity, and the next PD ray is we have this fair value gap. What are PD rays? PD rays stands for premium and discount. Now, premium and discount actually means we sell in premium and buy at discount. So this is a fair value gap. It's a monthly fair value gap. So we would wait for the market to come into this level, and then we would want to see what the market will do once the market comes to this level. With that being said, also this PD ray aligns with more PD rays on this level. Okay, so even if we are to expect a sell maybe to this PD ray, which because we do have another fair value gap here on monthly, so it's likely that we just are going up to this level to take out this liquidity that is resting here, because we have equal highs here, which we know that equal highs are liquidity. So this is a monthly fair value gap. So this is a monthly fair value gap. So until we reach this level, we're likely to be looking for more buys to the upside. Okay, so this is our monthly fair value gap. We also had another fair value gap on our monthly, but now we're on a weekly time frame. Let me just check. Yes, we did. Here's it, between this candle and this candle, but our main focus is the one that is more close to us. Okay, so let's pay attention to that and see what the market okay, so we are going to weekly. We're going to do a top-down analysis from higher time frame all the way to our lower time frame. Okay, so here we know that the market took out these equal or relatively equal lows. So as I said, on monthly we had taken our sell side liquidity, and now we have this low and we have this low. Okay, and we already know that these lows are gonna be used as liquidity in this market, which means we'd expect the market to push above these two levels. As we are on weekly, now we are looking at the structure that is helping us to push price to this level. Okay, so what do we have here? We have a break of structure here, a clean break of structure, because it has a body close to the upside. Okay, and then we have a PD ray. Now we have a weekly fair value gap here from this candle and this candle. We all know that our fair value gap is formed from candle 1 and candle 3, which means in a bullish market it's the high of candle 1 and the high of candle 3. So if I put this like this, we are actually just at the fair value gap here. So the market did tap into this fair value gap. However, I'm just trying to, okay, here we don't have a fair value gap. We have another fair value gap here, which has been fully mitigated. This fair value gap, candle 1, 2, and 3, we said it's the high of candle 1 and the low of candle 3 in a bullish market. Okay, so these are the points of interest that we have currently. So let's go to daily. Okay, on daily we have this fair value gap, which is an open space. It's like candle 3 and candle 1. So the market did tap into that level. This is now the daily fair value gap. Okay, so we have two confluences here, and then we have another daily fair value gap. Here's it. We also have this level as our daily fair value gap. Okay, so I don't know which one the market is going to use, but looking at this, for me, I would want to use this one because it has a deeper retracement, and if we use this, then this lows become our liquidity, because right now we don't have any liquidity that was taken out. Okay, so I'm gonna have to delete this, and then yeah, you see the market did tap into this, and then there's also another gap here. So in a bearish scenario, our fair value gap is the low now. It's no longer the high, it's the low to the high. You understand? So I would be more safe taking this trade from here. Anyways, we also have another break of structure here, a clean break of structure to the upside. You understand? This being the last break of structure, and then all of these would be used, like this level here for me would be used as my major inducement because it occurred after a break of structure, whereas this turning point would be a minor inducement for me. Okay, so let's go to 4 hours and see what the market has to offer. Now we're just kind of breaking down our, okay, and this level is quite clean and to the point and to the T. So okay, this level has been mitigated, so I'm not gonna consider this. However, there's also this fair value gap, and that's the level that push price further up. But I'm still expecting price to come in, mitigate at least this level. So for me, this, I feel that it's smart money trap. Yeah, I feel that this is just liquidity, you know. I feel that market makers are just going to use this level as liquidity, because it's quite clear a lot of people are going to want to enter from this level, since this level was not giving people prices to enter. You understand? Like, there are no fair value gaps or order blocks that have fair value gaps, so this is likely the level where price would want to trap traders. So for me, I already know that we have this fair value gap here, so I'm gonna mark the order block or the demand zone. So this will be my demand zone, right? Like, the order block is also aligned with the fair value gap, so I'll just say order block plus fair value gap. And then I have this fair value gap here, which is a quite clean fair value gap. So that's the level where I'd want to actually enter the market. That'll be my fair value gap. Okay, let me just push it slightly this side and then probably use that'll be my fair value gap. So I'm not gonna go any time frame below, because this trade is quite clean on my side. This is quite a clean trade, and for me to go long and target this level, where I know that above this level we have our liquidity, my stop loss will be below this low. Okay, so my stop loss will be above that low, and then this is a 1:4.4 trade. Basically, that's all I have on the DXY. And then let's go to the USD JPY. Okay, when I was expecting this trade to actually come and take this level here, since we have equal lows here, and then this inducement, or rather liquidity, was taken. So if the market does happen to push further, actually I won't blame it, but for me, I wouldn't have taken this trade due to this fair value gap that was so massive, and the market just came straight down to the entry. There is no dynamic moves where we're having like a trend towards the bottom. So this was the trade actually, and quite frankly, I would have loved to enter this trade here. Why? Because let's go to daily. Okay, on daily, but now there's something that I'm seeing on daily. Okay, on daily this would have been my no guys, don't get me wrong, but on daily this would have been my order block. Okay, this would have been my order block that also has induced liquidity in the middle, but obviously I wouldn't have taken a trade from this order block, and then my stop loss would have been below this low, or even below this low. It's still not a worthy risk to reward ratio trade. So as the market is at this level, it's most likely to take this liquidity. So let's leave this trade for now, and then let's go to the pound. So the pound, we're actually just gonna start. Oh, okay, the trade is already, wow. For me, the pound is pretty much bearish actually. Well, the overall trend is bearish, you know. So you see from, okay, so we were bullish, and then within this range is what we actually analyzing, and we're more focused on this dealing range from here to here. So here we have a trending market to the downside. Okay, so we had a change of character here, you know, and then from this change of character, market came back, tapped into this order block, which for me was this fair value gap. So I knew within this range, and I think this is the trade that actually made me pass my alpha capital challenge, you know. So the market came down, made an order block, and then pushed further down. So this pullback for me was actually a like inducement, I'd say, you know. So I'm expecting the market to come within this level and then push down. Why? Because if we go to weekly, let's go to weekly time frame and see something. On weekly time, PC is low. Let me just charge it. Okay, so this is the order block. This whole candle here is the order block, but when you go to dailies, you notice that the low of this candle and the high of this candle, as you see, I've put this, that is our fair value gap, and I expected the market to tap the order block and then probably push down. So as the market hasn't tapped it, I don't think I'm going to want to enter here. I would want the market to tap this level, and even, let me just extend my order block, my short position, because even if it wants to take this low as liquidity and then push down, I'm okay with that. I understand. So this is the trade, and then where's this trade? I also had this trade. Okay, so now I removed but let's go to monthly. First of all, we want to see what direction is this market. Okay, so